If you're a homeowner that's currently selling your property along the Panhandle, it's likely that you've heard feedback from one of your buyer's agents that has recently shown your house that the buyer ended up going with new construction. It's frustrating considering your home is likely on a larger lot in a more established neighborhood, closer to bases, beaches, and other amenities. But for some reason, buyers continue to gravitate towards the new construction. So what is causing it? In one word, costs. Insurance costs are lower, closing costs are lower, and overall mortgage payments are lower. Builders are throwing incentives at buyers in order to have the buyer choose them over a resale property like yours. Appliance packages, design center allowances, and then amenities within the community like pool, fitness center, basketball courts, pickleball courts, golf simulators, dog parks, just walking trails, and they can do it because they have big money. So if you're a resale seller, how are you going to compete with something like that? Well, I have 6 tips to help. Number 1, solve the insurance problem before it comes to a head. Things like replacing your roof or water heater that are 15 years or older before you list will take away that red flag from a buyer. And also it will allow them to see that, hey, there's a brand new roof with a transferable warranty on it. That is going to be a major seller and take away the emotional aspect of saying, we're going to have to save up for a roof in the next 5 years. By having a brand new roof on your house, you can also reduce that insurance premium by up to 30% because it allows more carriers to write on that home. If you have a very limited number of carriers because of the age of your water heater or your roof, their prices are often going to be much higher. In addition, by having a brand new roof on your house before you list it, it prevents things like buyers walking away because they're nervous after an inspection or asking for the repairs to be done while you're in escrow or just a large repair credit off of the closing. So by doing it ahead of time, you take away all of those worries from a buyer. Number 2 boils down even more into the insurance things, and it has to do with the wind mitigation report that you get when you replace your roof. So what I would recommend while you're already replacing your roof and the shingles or the metal or the tile is off, definitely get the secondary water barrier if you are in Florida. This is not a requirement currently with insurance carriers, but I have heard that it might be in the future. So if you're already replacing your roof, spend that little bit extra money now and get that secondary water barrier because it'll pay dividends in the end on your insurance premium later on. In addition, if you're also looking at doing repairs to your roof, make sure that you have things like hurricane clips or straps. That will also help to reduce the insurance premium for a buyer. And if your roofing company allows it, ask them to give you that wind mitigation report after the work is done, but leave the buyer name or the owner name blank. This will allow the buyer to fill in their name and turn it into their insurance carrier. Because sometimes you could have a brand new wind mitigation report, but if it doesn't have the buyer's name on it, the insurance company won't use it. Number 3 is pricing against new construction as well as other comps in your neighborhood. So while it's very useful and most agents will pull comps within your neighborhood because those are the best to compare to, you also have to assume that buyers are searching outside of your neighborhood as well. So if you have a home listed in, let's just say, the $450,000 range, while there's new construction a couple miles down the road that's at the same price point or maybe even a little higher, you have to assume that buyers are looking at both your resale and their new construction, knowing that the new construction insurance costs are going to actually make it cheaper to buy the new home rather than yours. So when you're pricing, you need to actively look at what is active, pending, and sold within your neighborhood, but also what is happening outside your neighborhood with new construction, incentives that are being offered, and how you can compete against that. You need to be priced accordingly at the very beginning. Number 4, try to match the builder's incentives. If you've owned your home for quite some time, it's likely that you have quite a bit of equity built up. So why not use some of that equity to incentivize a buyer towards your home versus the new construction down the street? Things like an interest rate buy down or paying down the buyer's closing costs is going to be a huge incentive for buyers because they're going to see the cost savings immediately. Things like a 2-1 buy down on their interest rate will reduce the interest rate of their mortgage by 2% in the first year, 1% in the second year, and then go to the market rate in the third year. This will allow savings for the first 2 years of the loan, and if they are able to refinance during that period, maybe they will. Other things like a $10,000 closing cost incentive is going to be money that the buyer can keep in their pocket and is going to be much more valuable than a $10,000 price reduction to reduce their monthly payment by maybe $20. Number 5, push the location card and do it hard. Because right now, buyers are not just looking at the cost, they're also looking at the lifestyle. That property that's a brand new construction is likely further away from the beach, likely further away from established amenities and restaurants that they love. So if you are close to the beach, close to neighborhoods, close to shopping, close to work, and your community has sidewalks, established trees, maybe community events, push those things and advertise that. Make sure a buyer is well aware of the lifestyle that they could enjoy being in the resale home versus the new construction. And lastly, emphasize the fact that you likely have more space and more lot than a new construction home will. Most builders will put as many homes as they can inside their plot in order to make as much money as possible. This means that it's most likely that new construction homes will be very close together, not have very many established trees in the neighborhood, and therefore just not a lot of character. So if your neighborhood has different style homes, established trees, privacy, and you're not on top of your neighbor, then emphasize that lifestyle. Make sure that people understand that your property will allow kids or pets to run around. It will allow community events like barbecues or Easter egg hunts or water fights with the neighborhood kids, that there's plenty of space for that, and not just on a tiny postage stamp sized lot. So the bottom line, if you're currently a seller in the Panhandle in this market, then it's not impossible to compete against new construction. While new construction does have the benefit of all of the incentives and lower costs, it's likely that you have the benefit of the established neighborhood and more of a lifestyle that Florida buyers are looking for. So if you have the ability and the equity in your home, try to push those incentives the same way that the builders do by offering closing cost incentives or interest rate buy downs before you do a price reduction. Also, if you're able to and your roof or HVAC or water heater are a little bit older and towards the end of their useful life, consider changing those out before you go on the market. This will take away any insurance issues and any red flags that may come up during inspections. So if you've got a property that's currently on the market in the Florida Panhandle, or you're looking to put one in, I hope you found this informative and will take it into consideration when you're pricing your property or advertising the property. You definitely want to push the lifestyle and make sure that buyers are well aware of how wonderful your property is versus the new construction.